grants, where funds might expire at the end of the federal year, and so on. So the point here is that the account is simply the tip of the iceberg. It relates to a lot of other things that are very useful in your reporting and also in controlling the integrity of the system. Transaction processing in KFS is done by end users through electronic screens. We call them electronic documents. So you may call up an electronic document, you want to do a disbursement or you want to do a requisition. Well, the screen will come up and we call that an e-doc. Now every e-doc has built-in edits before it can enter workflow for approval. For example, if this is a labor account, you're not going to permit a piece of equipment to be charged to that account. If this account has expired, there may be some issues too, and so on. Well, an account isn't going to, a transaction won't go anywhere unless it complies with the built-in edits. And these edits are controlled by you. Of course, you can check for funds available, and depending on how you manage, you can stop any transaction that is going to cause an overdraft. That, again, is an option. It's up to you. Only fully approved transactions that pass these edits can be posted to the general ledger. There are business rules, as I just mentioned. These are maintained by what we call financial system parameter tables. You'll get a pretty good list right out of the box with KFS, but at implementation you'll go through this and say, is this how you do want to operate at your university, or do you want to change them? And they're quite easy to change. Functional users can maintain and create business rules, and you can customize based on your own policies. Workflow is a very attractive feature. A number of universities have already implemented workflow for legacy systems. And it's the routing engine for validated transactions. And as mentioned, you can use it on other systems. You probably only want one workflow system at your university. It will route transactions to proper approvers. It's highly customizable. A dean in one area or a vice president may have a more detailed control style, for example, than another. You can adjust for that. The way workflow works, for every account where a transaction is entered, there is someone responsible for that account. We call it the fiscal officer. You might call it the responsible person. That person is the first stop in workflow. Then any special workflow rules that you set up, pathways within that organization. Someone may say, I want to see everything over 25,000. Or someone may say, I'm really watching equipment. I want to see that. Well, you can easily set that up by organization. Then after the organization approvals, if any, then it would go to any central workflow stops. It might be that this is a government grant and this is foreign travel. Well, it might have to go to the grants office and so on. So all of this can be set up at the time of implementation. What one university told us is that function that used to take weeks now happens in hours because it's all paperless and the approvals can be very rapid, or the rejections depending on how it goes. The general ledger is where all of the financial data resides. It's the source of reports and for the auditor and so on. It has encumbrances in it. There are features at year-end that will handle your carry-forwards or reversions. Do you carry funds forward to cover open commitments? Do you revert unused funds in individual accounts to a central account in that area? Or do you simply lapse everything? All that is part of the year-end programs for the general ledger. There are special attributes that would drive your appropriations or other functionality. Of course, you'll keep track of fiscal year to date and project year to date. At the end of every fiscal year, you will close all revenues and expenses for your external reporting, but you will separately keep track of cumulative revenues and expenses in your contract and grant area, your capital projects area, and so on. There's a program called the Scrubber right before the poster, which validates accounts and does error handling. Now, if something has come in through an electronic document that we just talked about, the Scrubber isn't going to find anything because that account is good, but it will still go through it again. But if you had a big batch feed of payroll, for example, this would be important that it goes through the Scrubber. Now, a lot of automated things happen at this point. These flexible cash offsets I mentioned, the automatic capitalization of assets using the capital asset management module, plan indebtedness that transfers automatic over to retirement indebtedness funds from operations. Cost share transfers are done, indirect cost recoveries. All of these are done at every update, which is typically every night, so that your file is always reportable, always up to date. If an account has expired, usually there has to be a continuation number or a sponsoring department number that is automatically transferred to the successor account so that you don't have edit rejects. And sufficient funds checking is done right back at the EDOC level. If your style is to check for funds available before permitting, say, a requisition, then that would happen at the EDOC. And if it came in a batch feed for any reason, it would be enforced right here. Now, there are many of these EDOCs, as we call them, electronic transaction screens that you'll bring up depending on what you are authorized to do and what your work requires you to do. Auxiliary vouchers are for auxiliary enterprises, but they can be used elsewhere. They permit you to do accrual accounting continuously every month. You can put in entries for automatic reversal. You can inventory your food at the end of the month, and it will automatically get subtracted from your food cost that month and sent on to the next month. Advanced deposits are where funds have been received in your bank account, and now you have to make an entry in the system. Budget adjustments, once you have a budget, during the year you may be making transfers, setting up new accounts, and so on. Credit cards, receipts are handled, cash receipts. There's cash management, so that as cash comes in from receiving stations, it's prepared for bank deposits and sent on to the bank. Disbursement vouchers are for those payments that do not go through purchasing and a purchase order. Maybe you are having subscriptions to a magazine, or someone is buying a book, and under your policies that doesn't have to go through purchasing or reimbursing for travel, for example. The distribution of income and expense simply transfers items between accounts. It's a journal. General error correction, if you do get errors, lets you go in and make corrections in mass or just by doing a point and click, and it's a great help in keeping data up to date. Internal billing is for a service unit, like maybe even your telephone or machine shop or instrument makers, where they will be billing units of work to a customer. Journal voucher is, if you can't use a specialized journal voucher, why this document is available. But most journal entries are made through distribution of income and expense, internal billing, for example, or service billing down below. P-cards, procurement cards, service billing, again, is for your internal shops. The internal billing